from Davos continues. Joining me is Mr. K.V. Kamath, the head of the New Development Bank. Mr. Kamath, thanks very much for joining us here in a very cold Davos. It's all about China, Mr. Kamath. I mean, Xi Jinping was here. He wants to now be the sort of advocate for globalization and free trade. What's your own sense of the reception that he got and the China story?
I think he got a great reception, and for a reason, because I think the rest of the world leaders, look at Europe or Asia, are looking to see who will fill, in a way, the vacuum that America at times says it wants to leave in the global economic context. So clearly China is stepping into that space, and the people are listening.
I'll come back to China in just a bit, but let me ask you about India. You've always been a bull on India. People have downgraded the growth forecast for India, including the IMF very recently. What do you make of the downgrades that have come in?
Well, my own assessment is it's too early in the day to actually talk of GDP slowing down and so on, because we need to understand where this will stabilize. And we've not seen any degree of clarity on that. For example, what will be the impact on inflation of the move that has been done? What will be the impact on interest rates? And thirdly, what will be the lending appetite that the banks would have going forward with the lower interest rate climate and a cleaner, I would say, structure in terms of the marketplace. I would think all these should be positive, so I'm a little bit surprised why this is negative. Now, for it to be positive, there are certain preconditions that we need to look at. We need to make sure that interest rates do go down so that you have infrastructure spending and consumption come up. Because
How much do you see interest rates going down by?
I can't see how it will not go down by a percentage point. No, as I see it, at this point in time, given the liquidity in the system and the stabilization exercise that the Reserve Bank is carrying out, interest rates are being held in place. Now, if there is any change to the stabilization exercise, you will have a pressure on interest rates to go down. And if truly inflation, consumer price go down as everybody expects, then there is even more pressure for the bond yield the bonds to go down and the bond yields to drop. So to me, these combination of steps are good to the banks because if bond yields go down, they have a treasury profit, and that should actually put their woes behind. This woes for incremental capital could be out. Just to put the number in context, a 1% drop in the yields for government bonds would mean a profit of about 150,000 crores for the Indian banking system. And that's more or less your problem solved. And then, let's say 1% lending rates come down, the consumer is going to come roaring back. So I look for that day. And after that has happened or not happened, I would like to take a call whether the economy will go up or down. As of now, I would think I don't see any clarity that the growth rate should go down, but I see a lot of potential, in fact, that the growth rate should go up.
So you see an upside bias?
After a small probably dip.
Okay, so you're saying that it's too premature to say whether growth is going to be impacted negatively or not post demonetization. But if I may ask you about the manner in which this exercise has been implemented and the role of the regulator, because today in the Parliamentary Standing Committee, we are going to see the RBI governor answering questions, we are going to see finance ministry officials answer questions, and there has been criticism from former Reserve Bank governors and others on the role that the Reserve Bank has played through this. I want your assessment of what the Reserve Bank should have done differently.
Well, see, as I see, whatever I have to say is from a distance, because I've not been on the ground as it were there. But having said that, a move of this sort has to be kept very close. Obviously, it was kept very close. Thereafter, you can always criticize execution, but if the fact is that in the given time frame, 50 days or so, things have come to near normalcy. I'll just take two indicators. You remember, end of November, there was a huge issue whether payday, November 1st, or December 1st, how would it pass? It passed. And then same questions on December 31st. And of course, again, it passed without too much of...
But there have been constraints on withdrawals as well, sir, which have not entirely been lifted. They've only been relaxed.
What proportion of Indians really spend at this point in time more than 25,000 rupees in a week in cash? Now, we have this much stated number. There are 24 lakh Indians earning more than 10 lakhs. These probably that would mean 1 lakh a month if I were to round off. 24,000 a week is 1 lakh a month. So, question that arises is that where was this money going? And if the aim of the whole exercise was also to make sure that money that goes out into the system is tracked and traced and in a digital form, I think that probably the first target has been met.
So if we talk about future measures now, and the next big event on the economic calendar is the budget. And as always, every year there are expectations of what the government can deliver. But specifically in the context of where things stand in India today, what would be the imperative for the budget?
Well, I've never spoken on the budget all the years that I was in India. So
now that you're in Shanghai, sir.
I'll only say this, that I think the budget this time gives the government a lot of options. To look at how they want to set a tax regime for the future, how they want to set a growth, I would say, anchor for the future, in which areas and how. I think that's going to be what I would watch for.
If we were to talk about the way that there's sort of, in a sense, a redrawing or reshaping of global equations with the Trump presidency in the U.S., with the rising threat of deglobalization. What does this mean now as far as the global economy is concerned?
Well, again, to me, it will be premature to make a call because there are certain statements made by the U.S. leadership, but how actually will they play out? I think we need to see. And the fact is, sometimes we forget this fact, that as of now, two countries are accounting for 60% of incremental global growth, and that's China and India. So basically, whatever equation you draw, an equation without China and India in it is an incomplete equation. If these two countries are accounting for almost 2/3 of incremental global growth. So we need to understand how this plays out.
You talked about the Indian banking system and the kind of benefits that the Indian banking system could see. But what about the NPA situation? Do you believe that perhaps the worst is now behind us?
Yeah, in fact, there are three parts to the NPA situation. Have you recognized what was the problem? I would think that the previous governor did an admirable job to getting the banks to recognize what was the problem portfolio. The second is where is the capital to fund it? That was a problem till actually the last quarter, that is the September ending quarter, when you already had a 70 pip drop in the yields. And that, again, rough arithmetic will tell us probably was 100,000 crore in profit. Realized or not realized, but the banks could realize that. And as I said, if another 1% yield drop happens in the government 10 years, you're looking at another 150,000 crores of profit, another 150,000. So your second challenge, how to recapitalize, is over. So I would actually ask a question: is there really a recapitalization need through the budget at all?
Okay.
Get banks to work together to realize the profit that is on their books, and in a measured way over the next 6 months, realize the balanced profit, and your book should be clean. The third part, and most important part, is putting back to productive use those assets. And indeed, they have to be put back to productive use. There are several ways one can look at it. But one good thing is a handful of companies, less than 100, account for probably 70% of the stress asset in the system. And by this, I'm looking at a cut of maybe 7 lakh crores of assets. And less than 100 companies account for bulk of them. So it should not be too difficult for a government-led an exercise whereby decisions are taken on how these need to be addressed. And whatever way you want, you clearly will need to see that there is no moral hazard. So people who are going to benefit from restructuring or whichever way you want to address these assets need to be held accountable. And do it without moral hazard. And I'm sure the number is not daunting. If it was 1 million cases to be, then I would have said that's difficult. So I'm sure they will reach a solution.
So as you look at 2017, sir, what will be the key inflection points that could, in a sense, impact the global economy? What would you be watching out for? What would you be concerned about, the key risks that you're watching out for?
I would first look out for India itself. I would think that we are in the sweet spot. Interest rates ought to come in as far as India is concerned. We have an unfinished agenda in terms of infrastructure, in terms of the consumer movement and so on, which are strong growth drivers which we should leverage. And clearly, the banking sector, if it gets strong, post all these exercises, you have lendable capacity. So India is in a sweet spot, and I don't think we are too risk. We're not carrying too much risk because we are not that dependent on the outside world for growth. It's an internal driven engine. As far as the world is concerned, clearly there are going to be challenges because how will the US execute what they are articulating as going to be their strategy? But if they execute well, they also have a huge growth driver. If they want to set their infrastructure right, they want to set their cities right, it's a huge infrastructure driver, and it's going to work for common good. Rest of the world will have to understand how they, in this equation, I would say, find normal. And I'm sure they will do.
What about China, sir? You're sitting in Shanghai. I was talking to a couple of CEOs who have large operations in China. And with all its problems, the slowdown in the economy, the debt overhang, and so on and so forth, they believe that the government in China always manages to figure things out. What is your sense about the China story today?
1.5 years there. I've been there 1.5 years. And that's exactly my feeling too, that they manage to figure things out in an appropriate manner. So, for example, I would think that whatever challenges they have thought them through to the extent that challenges are visible, or they have forecast what challenges could happen and thought them through. And there is a plan of action to address each one of these challenges. So, for example, for the debt overhang that is there in the system now, there is talk that a large number of ARCs will be set up, and these will be provincially led, and the assets will go into the ARCs, and the ARCs with provincial support will raise long-term money. So the banks are going to be, clean of these assets. Of course, these assets were probably related to the provinces, so it is appropriate that this is done. But they have used a variety of tools and done them in a very open manner to set things back on an even keel.
What's the outlook for the bank in terms of lending in 2017? What milestones do you hope to achieve?
Well, in the first year we said we would lend, actually create a book. We did about $1.5 billion and projects across all our member countries. We said that we will push local currency financing, and initially there was skepticism whether that will work. But we did raise Chinese renminbi bond, and we have now started lending into China using renminbi. And I'm pleased to say that there is enthusiasm to look at rupee lending into India, and we will probably in the next few months, when we get an international rating, raise an offshore bond and then start lending into India in rupees. And slowly we will explore other markets. Some of our other member countries will be a little more difficult, but we will work on it, because I think now everybody realizes that the big challenge is finding, is hedging the volatility that foreign currency borrowing brings you. So we are on the right track with the local currency.
Well, sir, always a pleasure speaking with you. Thank you very much for joining us here in Davos, Mr. Kamath.
Have a good time.